In an era defined by geopolitical volatility and regional instability, the need for a country to strengthen their defense capabilities has never been more important. Amid the recent tensions in the Middle East, a critical issue has been highlighted for nations around the globe to maintain a strong and up-to-date defense system. While diplomacy and peaceful resolutions are always preferable, a robust defense system serves as a deterrent and safeguards national security. But then again, the buck doesn't stop there. The benefits of defense upgrades extend far beyond the realm of national security. By fostering a robust defense industry, nations stimulate economic growth, create high skilled jobs, and drive innovation. The technologies developed for defense purposes often find application in civilian sectors, catalyzing advancements in fields ranging from medicine to telecommunications. In this video, we will discuss the defense industry in India and the importance it exhibits from the country's standpoint. We will talk about the defense manufacturing in India and the trend of defense exports. Lastly, we'll talk about the different players in India's defense ecosystem and conclude with some key takeaways. Let's begin. You're watching Informed Investor, an initiative by Equentis. Military expenditure has witnessed a dramatic surge on the global scale. In 2023, it reached $2,443 billion, marking a 9% increase, the steepest since 2009. The 10 largest spenders in 2023 was led by United States, China, Russia, and India, which all increased their military spending. The United States dominated the global military spending in 2023, allocating a massive $916 billion to its military. This sum accounted for over 40% of the world's total military expenditure that year, which stood at $2.4 trillion US dollars. This amounted to almost 3.5% of the US GDP. Among the nations, Ukraine's military spending reached 37% of its GDP, the highest proportion globally. This significant allocation reflects the ongoing conflict with Russia. This trend of increased global military spending does reflect a concerning deterioration in global peace and security, prompting nations to prioritize military spending. So where does India stand? In 2023, India emerged as the fourth largest military spender with an expenditure of $83.6 billion. This figure represents a significant increase of 4.2% compared to 2022 and a remarkable 44% jump since 2014. Now let's shift our focus to India's recent budgetary allocations. On February 1st, 2024, Finance Minister Nirmala Sitharaman presented the interim budget for the financial year of 24-25. From a total allocation of approximately $574 billion or 47.65 lakh crore, a significant portion of 74.8 billion, approximately 6.2 lakh crore, was allocated to the Ministry of Defence. This figure represents a 4.5 increase over the previous allocation. And more importantly, the highlight is that the budgetary allocation for defense for 24-25 was the highest compared to the other ministries, to the tune of 6.2 lakh crore. While India's defense budget has witnessed consistent growth over recent years, the allocation for fiscal year 25 remains at approximately 1.9% of the GDP. It's crucial to remember that these interim allocations are subject to change in the final budget, scheduled for presentation in July 2024 after the general elections. However, they do provide valuable insights into the government spending priorities for defense. Moving on, in recent years, the Indian government has undertaken a series of strategic initiatives to strengthen domestic capabilities in defense manufacturing. India's reliance on foreign defense procurement has steadily decreased over the years, while its strategic and economic capabilities in the defense sector have grown. Defense exports reached a record high of 21,000 crores, approximately $2.63 billion in the 2023-24 financial year, a 32.5% increase compared to the previous year. These figures indicate that the defense exports have grown by 31 times over the last decade. Both the private sector and the defense public sector undertakings within the defense industry have played a critical role in achieving such high levels of defense exports. The private sector's contribution stands at approximately 60%, with defense public sector undertakings contributing the remaining 40%. With exports reaching more than 85 countries, India's defense industry has shown its capability of design and development to the world, with 100 firms exporting defense products at currently. This significant growth can be attributed to several factors. Government policy reforms aimed at streamlining business operations through the ease of doing business initiatives have had a positive impact. Ultimately, this impressive growth trajectory reflects the increasing global acceptance of Indian defense products and technologies. Now let's discuss defense stocks. So basically, defense stocks in India refer to the stocks of companies involved in the defense industry, including those engaged in manufacturing military equipment, providing defense services, and supplying technology solutions to the defense sector. These companies typically cater to the needs of the Indian armed forces and sometimes export products and services to the other countries as well. So when we talk about the Indian defense sector, we can break it down into four major segments, each with its own set of companies that play a crucial role. First up, we have the aerospace segment. Now in this area, we've got some big names like Hindustan Aeronautics Limited, or HAL for short. They're known for designing, developing and manufacturing all sorts of aircraft and helicopters as well as their components. Then there is Bharat Electronics Limited, or BEL. They're the go-to guys for advanced electronic equipment and systems used in defense, like things like radars and communication systems. Moving on to shipbuilding and shipyards. Cochin Shipyard Limited is a major player here, handling the construction, repair and maintenance of various types of ships, including those used by the Indian Navy. Then there is Garden Reach Shipbuilders and Engineers Limited. They specialize in building naval vessels like frigates and corvettes. And we can't leave out Mazicon Dock Shipbuilders Limited. They are experts in constructing warships and submarines, making them a key player in naval defense. Now let's talk about ammunitions. Bharat Dynamics Limited is another important player focusing on missiles and torpedoes. And then there is Solar Industries Limited India, which specializes in producing explosives and ammunition for both defense and civilian use. Lastly, we've got the ancillary or parts supplier segment. Bharat Forge Limited is a heavyweight here, supplying critical components for defense vehicles and aerospace applications. Larsen & Toubro Limited is also a big player, providing engineering and manufacturing services for defense equipment. And let's not forget Dynamatic Technologies Limited, known for manufacturing precision components and systems for aerospace, defense and automotive sectors. So you see, each of these segments and companies plays a crucial role in ensuring the strength and security of India's defense sector. Now when looked at the performance, the defense sector has been buzzing on Dalal Street. Shares of defense players have already delivered robust returns to investors in the past 1 year and 5 years, as seen on the chart on your screen. Now let's break down what's behind the surge in the stock prices of defense stocks. First off, we're seeing a significant uptick in global geopolitical risks. Countries around the world are feeling the pressure to bolster their defense budgets, and India is no exception. In fact, India currently ranks as the fourth largest military spender globally, and in the recent interim budget, there was a hefty allocation of around 6.21 lakh crore to the Ministry of Defense. This hefty investment is definitely catching investor attention. But it's just not about global dynamics, there's a lot happening domestically too. The Indian government's Atmanirbhar policy, which essentially means self-reliance, is playing a big role. This policy is all about encouraging domestic manufacturers and opening doors for private sector participation, including forming strategic partnerships with foreign players. As a result, we are seeing domestic defense companies grabbing a bigger slice of the country's defense spending pie, which is definitely translating into revenue growth. So when you combine all these global tensions and India's push for self-reliance, it's creating a perfect storm for the defense industry. Orders are flowing in, revenues are growing, and naturally that's driving up stock prices. It's an exciting time for the sector, and investors are definitely taking notice of the opportunities it presents. Let's take an example of a defense stock. The first name that comes to mind is Hindustan Aeronautics Limited, or HAL, which is basically India's champion for aerospace and defense. HAL is a government-owned company and acts as a primary designer, developer and manufacturer of a wide range of defense equipment for the Indian Armed Forces. This includes fighter jets, helicopters, drones and various aerospace systems. And interestingly, HAL enjoys a monopoly position in the domestic defense aircraft market as the Indian government prioritizes sourcing defense equipment from indigenous sources, giving HAL a significant advantage by getting a lot of support and contracts from the government. Secondly, over decades, HAL has built a strong reputation for its technical capabilities and experience in designing and manufacturing complex defense aircrafts. Lastly, HAL possesses a vast network of production facilities and skilled workforce, making it challenging for new entrants to compete effectively. Now let's look at the financials of the HAL. If you can see the chart on your screen, the total revenue from operations or gross sales came in at 2.6 lakh million in fiscal year 23, growing at a CAGR of 7.655% over the last 5 years. What's impressive is that the profit after tax grew at a CAGR of 24% over the same period. In fact, all metrics like sales, total income, gross profit, profit after tax saw a commendable increase over the last 5 years. The total debt or borrowings of the company saw a considerable reduction from 9,045 million in fiscal year 18 to a mere 490 million in fiscal year 23. Now coming to the ratios, both return ratios, those of return on equity and return on capital employed, hover around the 30% mark, showing how efficiently the company is employing funds into the business. Moving on, the overall defense theme is a structural long-term story which would unfold both the increasing government focus on making India self-reliant along with a large opportunity from exports. But what do you need to know as an investor? Defense companies often benefit from government spending on national security and defense. India's geopolitical situation, including border disputes and regional security concerns, can influence defense spending and the demand for defense equipment and services. This consistent demand for defense equipment and services can provide a stable revenue stream for defense companies. Defense contracts are often long-term in nature, providing a predictable revenue stream for defense companies. These contracts can span several years or even decades, offering visibility into future earnings and cash flows. While defense spending tends to be less cyclical compared to other sectors, it can still be influenced by economic and geopolitical factors. During periods of economic uncertainty or heightened geopolitical tensions, defense stocks may outperform other sectors as governments prioritize national security and defense spending. For example, major defense stocks rallied on April 19th when markets witnessed sharp selling. The reason is the war chaos in Middle East, with the latest reports indicating Israel's retaliation on the key nuclear infrastructure of Iran. Indian defense companies are increasingly exploring opportunities for exports to foreign markets. Government policies, notably like Make in India and Atmanirbhar Bharat, are instrumental in fostering domestic defense production and reducing reliance on imports. Investing in companies with a strong export focus could provide exposure to global defense markets and diversify revenue streams. Including defense stocks in a diversified investment portfolio can help reduce overall portfolio risk. Defense stocks may exhibit low correlation with other sectors of the economy such as consumer goods or technology, making them potentially valuable for diversification purposes. To conclude, for investors like us, this does present a compelling narrative of growth and opportunity. The strong order books, promising profit outlooks, and bolstered return ratios of these companies underscore their resilience and potential for long-term value creation. However, it is also crucial for the valuation bit. If you're interested in a depth analysis of any of the defense companies we've mentioned, do let us know in the comment section. Having said that, this is me, Ralston, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.